Hey everyone, this is Matt with the Fundamental Investing Institute. We're making a series of videos that are going to be geared towards beginner stock investors. These are people who are just getting started. They've saved some money, they want to open a brokerage account, and of course, taking for granted that the reason why you invest in common stocks is you want your money to grow over time. It's always a question of where do we start? Where does a beginner investor start? And I think rather than just kind of jumping in, there's some key questions that beginner investors really need to ask. And what these questions do is they take you down certain paths. And so rather than just getting started, just kind of blindly buying common stocks or maybe just focused on a couple of financial ratios, I think these questions are very important. So these are the three key questions that beginner investors, beginner stock investors want to ask themselves as they kind of go down their journey of investing in common stocks. And I think about these questions as kind of a pathway. So the answer to each question is going to determine which direction that beginner investor is going to go. So the first question you want to ask yourself if you're a beginner stock investor is, how involved do I want to be? How much time do I want to put in? And this is really what we would call the active versus passive question. So if you don't want to put a lot of time in, one very effective thing that you can do is you can simply buy index funds. Index funds can be in the form of mutual funds or exchange traded funds. The difference is that a mutual fund is a organization that manages money, and in this case, it's just going to hold whatever basket of stocks is in an index. But when you buy or sell shares, you're actually transacting with the mutual fund company itself. In the case of an exchange traded fund, that basket of securities, shares against that basket of securities is going to trade just like a common stock. So arguably ETFs may be a little bit easier, more convenient. Either way, that's certainly one option. You just buy one of these index type funds, and if you do that, then your question really becomes a matter of allocations. So allocating so much money to an index that owns, say, large cap domestic stocks. So that would be like the S&P 500. You can look at index funds that own international stocks, smaller companies, but the focus is really going to be on just these broad allocations, not on individual stocks. Now, if your answer to this first question is you want to invest in individual common stocks and you're willing to put in the work, that brings you to a second question, which is, do you want to be an investor or do you want to be a speculator? The difference between those two is very important. An investor is someone who is applying what's called fundamental analysis. They're thinking about shares in a company as ownership, pieces of ownership in an underlying business. So stocks are not just pieces of paper to be traded back and forth. And most of the research is going to be on studying the underlying business and having some assessment of what that business is worth, independent of the stock price. So this is what we call fundamental analysis, fundamental research, and this is going to be a different school of thought than if you were a speculator. If you're a speculator, then you're focused more on trying to figure out where the stock price is going in the short term. And there are certainly plenty of people who do that, and they do that very effectively, but I can't offer very much. I focused always on fundamental analysis and fundamental research. So if you want to become an investor and you want to go that direction, that brings you to a third question, which is, what are the subjects do I need to study in order to become a successful investor, in order to apply fundamental research and invest in the best companies, the companies that can compound my money over time? What are the subjects that I need to study? And that third question, to me, number one, you have to understand how to read financial statements. That is key. Financial statements are the means by which companies communicate their financial position and operating performance to the shareholders. And so you need to understand how to read income statements, balance sheets, cash flow statements. You need to know how to read the notes to those statements. And for public companies, these statements are in annual filings called the Schedule 10K and quarterly filings called the Schedule 10Q. So if you're an investor, you're going to be spending a lot of your time reading these financial statements. And so you need to understand that basic financial accounting terminology. You need to understand what these financial statements are conveying. The second thing is you really want to understand the basics of financial management, financial analysis. And this is really just what we call compounding and discounting. So we might know compound interest, how money grows over time, but really for our purposes as investors, we want to focus on a concept called discounting. And what discounting allows us to do is to compare different investments with different payoffs and bring those payoffs to today's dollars, and it allows us to compare apples to apples. So it allows us to compare investment alternatives. So understanding compounding, discounting, that's very important for beginner investors. And then really the third thing is you need to understand how to analyze business models and competitive advantages. And that really requires some understanding of what we call microeconomics. But once you get the basics and you start to apply this to individual businesses, you can see how companies that look very attractive today in terms of generating a lot of earnings and a lot of cash flow may not be so some number of years down the road. And of course, if you're an investor, you need to think in terms of 3 years, 5 years plus. So that's the direction that you really want to go. So those are the three key questions if you're looking to become an active investor, actively involved in selecting individual securities. You really need to determine what you're trying to accomplish, and that's going to bring you down that path. Nothing wrong with buying index funds and ETFs if that's the direction that you want to go. But if you want to become an active investor, there's a certain amount of time that you have to put in order to do that effectively. So we're going to continue to make these videos. That's just a starting point. Subsequent videos, we're going to talk about some of these subjects in more depth. And the goal is to really reach beginner investors, people who are just starting their journey in selecting common stocks. And then also we'll get into more sophisticated concepts like investing in private industries. And that's certainly an option for more advanced investors. But we're going to start with investing in common stocks and go from there. For the purpose of our video now, those three key questions, the active versus passive question, the investor versus speculator question, and then the question of what are the subjects that I need to study in order to apply fundamental analysis to the selection of common stocks. Hope you guys enjoyed this video, and we'll see everybody next time.